So GOLDINVEST has been reporting on Treasury Metals for a long time now. In that time, though, the advanced gold developer has come a long way with what is now called the Goliath Gold Complex. We're talking to a new CEO, Jeremy Wyeth, today, so we can bring us up to date. Welcome, Jeremy.
Thank you very much, Bjorn, and thank you for taking the time to talk to us.
Jeremy, we haven't spoken before. My last interview with this interim CEO, Greg Ferron, still. So please give us a background, a bit of background on yourself, and shortly tell us about the current team at the company.
Thanks, Bjorn. I've been with Treasury Metals about 4 months now. My background, approximately 35 years in the industry, 25 years with De Beers and Anglo American on 4 continents. I was responsible for building the Victor Diamond Mine in Northern Ontario in Canada. Only difference to that and the Treasury project is the Victor was at the end of a 400-kilometer winter road. So the world-class infrastructure that we have here is just such an advantage. I took it from a very similar stage. It was a desktop study. I took it through pre-fees, fees, permitting, construction, and then into operations. So I think I have a lot of learnings, really good learnings to bring from that to this project. You asked about our team. We actually have a good, solid core team that have been with the project for quite a while. And I'm starting to build a team of people that have financed and built mines before. And we actually have a new CFO starting tomorrow. And an example of the background is he has a capital markets background. He's raised $1 billion before in Canada to build a mine. And he's been the CEO of an operating mine. So I think you can see the focus here is looking at what our end product is and staffing us up to get there.
Sure, it needs a whole different kind of skill set from exploring and finding a deposit and then taking it to production. So I guess that's what's happening here. Well, then tell us about the project, because I think last time we really covered Treasury was just after the acquisition of the Goldlund-Project from First Mining had closed. So please remind our audience what Treasury has and what you now call the Goliath Gold Complex.
Okay, the acquisition of Goldlund, the neighboring property, has increased our land holding and our strike length 6 times. So it wasn't a small acquisition, it was a significant addition to our property. And this gave the Goliath Gold Complex what I call critical mass for the first time in its existence. And critical mass for me is 1 million ounces, 100,000 ounces a year, and 10 years. And previously, both projects, Goliath and Goldlund, just didn't quite have that critical mass. And as a result, they didn't move down that road to becoming a mine. So this was a game changer. We have 3 resources in the recent PEA, Goliath, Goldlund, and Miller. And Miller is an initial resource about 10 kilometers northeast of Goldlund. And what's really symbolic for me here is that with a reasonably limited amount of drilling, we already have a resource at the inferred level. And this just shows me how prospective this land package is.
Okay, well, sounds very good. We talked about that acquisition back then, and of course, we also liked it. We were told about the potential there, and you've moved it along quite a bit since then. Among other things, Treasury also finalized the PEA for the Goliath Gold Complex with a very positive outcome. Can you shortly sum up the key aspects for this?
Sure, I think probably the most important one, Bjorn, was this whole critical mass. So the PEA shows us 1.1 million ounces mined, a 13-year mine life, and just under 100,000 ounces per year for the first 10 years. It has a low capital cost, 233 million to build. And then on the financial side, an NPV of 326 million and an IRR of 30.2% post-tax at $1,600 gold. So good solid financials for this. And we see this as a starting point, and the plan is to grow this. There are vast areas that have not been drilled. So this is a starting point, and we see this growing as we move it through the PFS and into the FS.
Well, that was going to be my next question, really, because I think you're at almost 2 million ounces, or 1.965 ounces in measured and indicated, and another 500,000 ounces of inferred resources, which should be enough for a long time of production. But I think you're planning several 10,000 meters of tens of thousands of meters of drilling this year alone, right?
Correct. We are going to go after the upside on the property. In reality, about 3 kilometers out of the 65 kilometers of strike have been reasonably well drilled. So we're targeting areas within the other 62 kilometers. About 60% of our drilling is infill conversion drilling to convert the inferred resources to indicated for the PFS. And about 40% of the 60,000 meters is for additional. And as I said, we see the property growing. We've designed our drilling program to improve drilling densities. So this will enable us to model better continuity on all of the resources.
Okay, which is a very important aspect. Okay, you already mentioned it a bit, but apart from your exploration plans, what are the next steps on the path to production? And when do you think you will be able to make a production decision or construction decision for the mine?
Straight after the PEA, the board approved us to move into the PFS. We had really good positive results. We got immediate approval to go into the PFS. The first stage of that is trade-off and optimization studies, which will take us through to Q4 of this year. And then for the first time, we actually have a really good project description because we've now gone through those trade-offs. And that allows us to start two very important things, the provincial permitting and the impact and benefit agreement negotiations. And if you start the provincial permitting before you have that project description and you make a change, it really adds a lot of time. So we don't want to do that. The provincial permitting for Goliath will take us approximately 2 years. So we're looking at Q4 2023 to have permits for Goliath and to take a construction decision. Goldland will be approximately 1 year longer because we've just recently got the project and we have to do a gap analysis and data collection year. And if we start construction in Q4 2023, we would get first production in Q4 2025, about 2 years after we started construction.
Okay, so that's still a ways off, not that long, fortunately. What is the ultimate goal then? Is that in your presentation you mentioned the hub and spoke model? Then reminds a bit of Atlantic Gold, which were taken over by St. Barbara for about $800 million, I think. Could you shortly explain your strategy in that regard?
Yeah, that's correct, Bjorn. We are looking at the hub and spoke model. And what that really means for us is our hub is going to be at Goliath, right next to the infrastructure close to Dryden. So we'll build our processing and tailings facilities there. And then we'll be trucking material from Goldland and Miller and any other new resources that we have. So what we're really doing is we're leveraging the infrastructure strengths we have at Goliath, and we'll use this facility to treat all the material from the Goliath Gold Complex. And if we look at it, we compare very favorably with Atlantic Gold. And at this stage, I don't think the market is quite giving us that recognition and that valuation. And we're hoping that as we move this forward with the positive results from both the exploration and the trade-off studies, that we'll see similar valuations with time to the Atlantic Gold model.
Okay, well, certainly something to look forward to. Though, as we said, production is still a couple of years away. Nobody can really say where the price of gold will be then, although personally I'm betting on higher prices, as I guess are you. What kind of minimum price environment would Treasury need to still turn a profit?
Bjorn, in all of these studies, we've run sensitivities on the gold price. I tend to agree with you. I think the gold price is going up again. I mentioned that at a $1,600 gold, we've got a 30% post-tax IRR. $1,400 gold, we're down to just over 20% post-tax IRR. And at $1,200 gold, we're just over 10% IRR. So you can see that there are still robust economics as the gold price drops. And if both of us are correct and the gold price goes the other way, these numbers just increase and are far more favorable.
Okay, well, that's good to hear that there's some buffer there, but because you never know, we've been through a long time with low gold prices, hoping not to see that again too soon. So speaking of financials, of the financial side of things, the company is pretty well financed at the moment. You recently closed an equity raising for almost, I think, $18 million. But as you said, you have plans, expansive plans, so exploration studies to do. How long will that money last? And are you confident of getting financing in, even if gold should fall another couple of $100, for example? Because we both know that sentiment is very important, and I've seen it at the moment already that although the gold price is much higher than it was for a long time, sentiment just isn't there anymore.
Bjorn, we funded through to the end of 2021. So we've, as you said, we've raised some money now, which gives us a decent runway towards the end of the year. We're going to work very carefully with the money to maximize our progress. We want to ensure that we use the capital, we deploy it in the best way possible to advance the project. I tend to agree gold will be going up. We also have an aggressive drilling program this year, and we will be putting out releases from that, as well as the trade-off studies that we're doing. So I feel with the gold price and the news that will be coming out, I believe that our requirements to finance towards the end of the year will not be a major hurdle.
Okay, good to hear. So to wrap it up, to sum up, why should investors then at this point in time consider taking a closer look at Treasury in your personal opinion?
I think, Bjorn, for the first time, we have that critical mass. So I think people that have looked at it previously and said that it doesn't quite make it, I think that's the game changer, that we now have that critical mass and we can build it. We're extremely undervalued at the moment relative to our peers. And if you look in our presentation, you'll see we're trading at multiples way lower than our peer group, and even way lower than the average of our peer group. And I believe that's a legacy issue based on the fact that up until 6 months ago, it didn't have that critical mass. We're one of the most advanced greenfield development projects in a jurisdiction that is really sought after in the world, Northwestern Ontario, and we're right on world-class infrastructure, which again is rare in most development projects. We already have a federal EA. The PEA has just come out with strong economics, and we believe that we'll grow this as we move forward. And as you've seen from the recent new hire and the fact that there'll be more of those coming, we're building a team now that has successfully built mines before and that want to continue doing that. And I think that's a big change for the company, and I think the market will recognize that.
Okay. Well, thank you very much. Certainly looking to forward to seeing how it all goes. Best of luck, of course, because in mining, without luck, you can't get too far. So thank you very much for taking the time, and good talking to you.
Thank you very much. And I look forward to chatting further as we progress down this journey, and hopefully under more favorable circumstances in the world. Thank you, Bjorn. Thanks for your time.